Hi everyone, thank you for logging on with us today. We're just going to wait a few more moments for a couple more folks to sign on. Thanks. Hi everyone, welcome to the TBR Webinar series. Today, Senior Analyst Elitsa Bakalova, Principal Analyst Patrick Heffernan, and Analyst Kelly Lesiczka will be discussing bringing the best talent and technology in management consulting. Before we get started, a few housekeeping notes. At the bottom of your screens, you'll see a series of buttons. From left to right, you can access the slides, audio controls, Q&A, speaker bios, our survey, and social sharing. After the webinar, you'll receive an email with a replay link as well as a link to view and register for other TBR webinars. If you have any questions for us, please submit them via the Q&A widget in On24. You may also reach out to us after the event at webinars@tbri.com. Thank you again for joining us, and here's Patrick to begin the webinar.
Excellent, thank you. So I want to go over a couple things before we launch into the real deep content here, and I know there are folks who have joined us in previous webinars and know TBR quite well, and then other folks who this is maybe their first one. So I want to explain a little bit about the way we do things, but importantly about this management consulting research that we're presenting today. So this management consulting benchmark has been in play for about 6 years here at TBR, 6+ years, I'm not entirely sure, and the data goes back even further than that. It's been here as long as I've been at TBR. And it is a semi-annual product that comes out, and it covers 13 different vendors in detail. We do profiles on those vendors, then we also publish the consolidated view of what's happening across those vendors and across the market as a whole for management consulting. And again, it comes out twice a year. There are special reports that we publish about once a month, sometimes more, sometimes less, depending on what's happening in the management consulting space that sort of fills those gaps between the different published reports. But it is an important thing to understand that we're approaching it by looking at each of the individual management consultancies that are the leaders across the market and understanding what they're doing and understanding how the market is impacted by them and then how market trends impact their strategies, their performance, and where they're going. So with that said, I do want to explain that we look at management consulting as sort of the very top of the pyramid within IT services. We do cover IT services broadly, Are we on the right slide here?
Sorry.
There we go. That's all right. So we do cover IT services broadly. We have an IT services benchmark that actually Elitsa, Bakalova, who you'll hear from in a minute, and Kelly are both the leads on that particular benchmark. So we look at the entire IT services space. But management consulting itself is really the top of the pyramid. It has been for as long as consulting's been around, and that's in terms of both the margins that come through and also the way that management consulting pulls through a lot of the other IT services. A trend that we've seen for forever, but there may be some reasons to think that's starting to change, and we can talk about that later if there's interest. It's always an area. The other important thing about management consulting, it's always an area that IT services vendors want to expand into if they're not in it already. When we saw the Big Four firms reemerge after 3 of them had sold off their consulting practices, it was right back into the management consulting space. We've seen the India-centric IT services vendors invest heavily at times in building up consulting practices, specifically to go into strategy and operations, and those efforts have had, let's just say, mixed results so far. Even some of the telecom vendors that we follow very closely in other parts of TBR have invested in their ability to do management consulting, and again, with mixed results. The real important reason for that, why some firms are very good at it and some firms struggle, comes down to talent and permission. There are certain firms that you go to for management consulting. They have the permission to play with the C-suite, with the decision makers at the very top. They're the ones who have built the brand around strategy or operations or just management consulting broadly. And then those firms, it sort of plays to each other. Those are the firms that are able to recruit the talent that's needed to deliver management consulting. It's a different set of talent from the rest of IT services. And while we are seeing a blending of what's happening in technology consulting and emerging technologies more broadly with what happens in strategy consulting, and we'll get to that more detail later, it still remains that in order to be at the top in management consulting, you have to have both permission and talent. So with that, we'll talk about what exactly do we cover when we talk about management consulting. What are the specifics in this area? So our benchmark breaks management consulting down into 4 different service lines. We also break the data down by geography and by industry. We'll see at the end, it's a very extensive data set that we're working with, and I have to reinforce this again because I think it's really important. This data set goes back a decade. We've got an enormous amount, a track record of understanding what's happening with these vendors by looking at the data, and for many of these companies, they are not publicly traded, so we have to do a lot of the work to understand what's going on through the methods and the means that we're able to do that. So just to make sure everybody understands what's on this slide, that's only the 13 vendors, that $87 billion in management consulting revenues in 2018, and you can see the companies that are listed there. And then we wanted to ensure that you understand what we're talking about when we talk about the service line. So, what is strategy consulting? It's, what am I doing and why? What is organization and change? What is operations consulting? And then what is technology consulting, which is different than IT consulting. So we're really talking in technology consulting about what are the decisions I need to make and what are the areas I need to invest in, and how is technology going to impact my entire business, not making a specific decision about a specific IT or technology or the implementation side of that as well. And there is a convergence that's been happening that we've seen over the last few years between strategy consulting and technology consulting. And while technology consulting for almost every vendor, well, of the 13 we cover here, all of them, and many of the other vendors in this space, technology consulting is typically the smallest. It has been typically the fastest growing of the service lines. And again, part of that is because of that pull-through. Repeatedly, we hear that every single strategy engagement or every consulting engagement really is a technology engagement. So these lines are blurring, and it's something we've actually had discussions with our clients about, whether or not we need to rejigger these service lines, whether or not we need to find a different way to look at the market so that we can appreciate really what's happening and reflect what's going on as the vendors that we cover try to understand and change their business model based on the pressures that are happening in the client demand. So that will go to our first polling question, and it's when you think of strategy consulting, which firms immediately come to mind? And you know what, I wrote firms. I probably shouldn't have wrote firms. I really meant firm. Is it Deloitte? Is it Accenture, IBM, PwC, EY, McKinsey, or or none of the above. So again, take that as which firm, not which firms. And while you're filling that out, one name that's not on there is Capgemini, which went through a change recently with respect to their consulting practice. Elitsa, you want to just talk about that for a moment while folks are filling out the survey or the poll?
Yeah, so Capgemini up until this past quarter had a Capgemini consulting service line. This was a separate business subsidiary that covered management consulting. You know, and that was really going for many years for the company, but as of 1Q19 and a little bit before that, the company launched Capgemini Invent, which is now a business that integrates consulting activities with the broader Capgemini portfolio, for example, with analytics, with cloud-related activities, you know, advisory and implementation, with all the design consulting capabilities that were acquired during the past 3 years by the company, so that it covers a broader space and has a broader reach with client C-suite and has more activities with CMOs and CFOs and, you know, all the budget stakeholders to drive digital transformation for clients.
Excellent, thanks. And I know that they're a company, Capgemini is a company we cover quarterly. Elitsa writes the report on that, and then we also cover them pretty extensively in our digital transformation insights research. So if we go to the results, and we're going to see it's pretty no, it isn't mixed. Our initial view of that was we're looking at the numbers, we couldn't see McKinsey. All right, so I'm not surprised by that at all. And I think, as I mentioned, we do profiles on each one of these vendors as part of the larger management consulting benchmark. And the McKinsey profile is going to publish in a couple of days. We just wrapped up the research on that. And it is pretty stunning when you dive into that particular vendor and you look at them within the context of the larger management consulting space, how incredibly strong that brand is and how they really are almost synonymous with strategy consulting. And it's something that honestly is it's impressive, and it certainly helps them in terms of their revenue per partner. It certainly helps them in terms of their growth, which is just shy of double digits in 2018. But it also is it is a risk. The brand has been damaged in recent years, and is really at risk of suffering some more setbacks. And at some point, when 76% of the folks stop associating McKinsey right away with strategy, it's going to have an impact on their performance, on their outcomes, and how that firm goes forward. So with that, we'll go to the next slide, and we'll take a look at some of the data. You can see overall 10% revenue growth to almost 11% for the benchmark vendors, growing faster than headcount. And you can see that McKinsey number there that I mentioned. One thing I'm going to point this out, and then I'll turn it over to Elitsa. I think it's really important on the bottom left part of the graph on the left. You can see, to reinforce again, we've got this data going back very far. Now, I'm the kind of person that thinks I want to see the last year at the most. I can make a decision based on that because the trends, the things that are happening in the market are happening so fast. But it is valuable to be able to look back at the historical data and understand where a lot of these firms have come from and how they've been able to invest either successfully and ahead of their peers, or who has actually been lagging because they haven't had that same kind of growth trajectory or that same kind of revenue performance. So with that, I'll turn it over to Elitsa for some more thoughts on this particular slide. Elitsa?
Thank you, Patrick. So just to let you know, this is a global benchmark. We cover the vendors from a global perspective. We have 3 geographies: Americas, EMEA, and Asia Pacific. So all the data that's on the slides here and within the benchmark is our global, the totals will be global figures. And we would segment and provide different views by geography in our benchmark report. So overall, globally, revenue growth in management consulting has been accelerating for the past 4 years. 10.9% was year-to-year growth in 2018. What's notable is that management consulting revenue growth outpaced overall IT services revenue growth in 2018. And for IT services, we saw mid-single digits versus for management consulting, it was nearly double. So to accommodate for this revenue growth, in addition to acquiring and building their portfolios, vendors are really making sure that they have sufficient and high quality talent to provide the services that they have in their portfolios. So we see a constantly increasing headcount in management consulting specifically. The headcount growth has been kind of in line with overall revenue growth for management consulting, which tells us that vendors are stacking their headcount right in line with demand trends. They're not amassing excess pools of talent in anticipation of future, higher demand, which is the case when headcount would grow faster than revenue. So headcount and revenue are really in sync. So vendors in our benchmark, at least for the 13 vendors that we observe, are moving in line with demand in terms of the resources that they have to deliver services. As management consulting is a people-intensive business, we track multiple human resource-related metrics like revenue per employee, operating income per employee, utilization, employee attrition. And, I just wanted to call out here revenue per employee because it's important to compare with what we see in the other, broadly in the IT services space. So the billing rates typically in management consulting are significantly higher when you compare to other segments in the IT services industry. And, in this graph, we have the 13 vendors ranked in terms of revenue per employee. So we see McKinsey as the leader with $478,000 revenue per employee in 2018, which, as Patrick started talking about McKinsey, but, it's really able to charge much more higher and premium rates compared to its competitors due to its strong brand identity and due to the, high value services that it delivers. So McKinsey's revenue per employee is 2.6 times higher than the average revenue per employee that we see overall in the IT services segment. So Bearing Point, which on this graph has the lowest revenue per employee, would be closely aligned with what we see as the average for IT services. So all the vendors within this benchmark really outpace in terms of revenue per employee compared to the broader IT services space. Now, before we move on to the next slide, I think we have another poll question from Patrick.
Actually, before we do the poll, I want to point something out that's really important. Especially if you're familiar with these companies, with these vendors, I want to ensure that everyone understands that we're only looking at the management consulting headcount and revenue, and we're only looking at metrics across management consulting in this particular benchmark. We cover these companies, not all of them, but most of them, more extensively in everything that they do. But when we look at these companies, they do an awful lot more than just management consulting. Even McKinsey has IT consulting, has implementation revenues that are separate from their core management consulting. I think the only one that does strictly management consulting by our taxonomy and the way we look at these vendors is Bain. So when you look at sort of that revenue per employee, it's important to understand this is really only within the management consulting space and not the company more broadly. I mean, some of them, IBM and Deloitte and others, are going to have much larger practices that are outside of the management consulting space. So with that clarification, let's go on to the poll question. And so this is going to kind of give you a hint of where we're going next in this presentation, but what will have the greatest impact on the consulting business model? Is it going to be all these emerging technologies? Is it going to be an explosion of data? Is it going to be managing talent or something completely different? And I think here the one thing that we intentionally left off, one of the options was culture. We talk a lot about culture when we look at the performance, the strategies and the performances of the firms that we cover across all of IT services, because we think that culture ends up shaping the business model decisions. But it's probably the least easy thing to put a metric around. It's the most difficult thing to sort of predict where it's going to go, other than to say, culture almost never changes, even with some of these firms that have made some major acquisitions or made some major shifts in their go-to-market in the way they approach things. But culture is certainly an element within the consulting business model, one of the most important ones in deciding how a firm approaches the market and how they operate. But when we think about what's going to have the biggest change, we look at these three things. So with that, we'll take a look at the polling results, and it's technology overwhelmingly that people think is going to make an impact on the business model. And that, that makes sense. That reflects the way that the market looks at business models as a whole, not just in consulting. Everybody has their favorite statistic or their favorite survey that says that 9 out of 10 companies believe that they're being disrupted, or 9 out of 10 companies believe that some element of emerging technology is going to make their business more difficult or challenging in the coming years. And admittedly, I'm biased because I've talked to a lot of technology companies, but technology definitely is what people expect are going to impact the consulting business model the most. I would say that data is an important element. We're going to get to data in a minute. And then for me personally, I think that the talent management part is something we have seen the more successful, not only the more successful management consultancies, but the more successful IT services vendors have been able to figure out how to manage their talent better than their peers, and that arguably is what separates them when it comes to financial performance. So with that, we'll take a look at sort of the impact of technologies on emerging technologies on what's been happening within the consulting space. And you can read here what's been going on. It's pretty clear that we have seen the convergence between technology and between the emerging technologies. Let's take RPA for an example, robotic process automation, and consulting, and how increasingly this is not only an offering that the consultancies provide, but it's sort of expected to be part of any kind of package around supply chain, any kind of package around finance transformation. All of those different, what had previously been purely consulting service lines, are now being impacted by technology. And so some of the bigger impacts on that, we are beginning to see vendor agnosticism start to slip, where the large consultancies are less agnostic about who they work with in terms of their large technology partners. There are exceptions, and McKinsey stands out as one that has maintained a real sort of firewall between themselves and any deep alliance with a technology partner. That could change, but it exists now. But some of the consultancies are much more closely embedded with and much more closely partnered with some of the technology vendors. You take EY and PwC have both done much more with Microsoft in the last couple of years, and I think we're going to see that continue to play out. And I think we'll continue to see, if not a full-on marriage between some of these consultancies and the technology vendors, then at least a much tighter partnership and alliance as the technologies become more prevalent throughout, sort of immersed or infused across all of consulting. Another aspect of that is platforms. A lot of the consultancies themselves are beginning to develop platforms, emulating what Accenture has done for a couple of years now. We see platform as a service being rolled out by the consultancies as well. We're also seeing new business models that are being built around technology. So a number of the consultancies, the management consultancies that we track very closely, have developed their own software solutions, have sold software, have provided software as a service, have even provided managed services, and it's a practice, or it's practices within these vendors that are really beginning to grow. And we've challenged over the years some of the Big Four firms in particular as to whether they're becoming software vendors based on the amount of investment and the revenue that they're driving from these software-led engagements. And while we don't believe they're heading down that road, and they tell us they're not, it's important to understand how the consulting business model now includes much more than just deploying smart people to solve problems. It really is about deploying technology, and in many ways, packaging, putting your intellectual property rights around, and putting a managed services around the software or the solution that you're selling. So with that, one other thing I want to touch on before we turn it over to Elitsa again is looking at data. Everyone knows data. There's an explosion of it. I mean, again, you can pick your favorite survey or your favorite study that says how much data is being generated every day and all that. Just a couple of observations from my end. talking to a lot of the management consultancies and the IT services vendors out there, for most of their clients, the data ecosystem is a massive headache, and I don't mean data within a particular service line or data within a particular function in enterprise. I mean the entire data ecosystem, and that provides a great opportunity for consultancies to provide guidance and mapping and orchestration, and all of that needs to take place before a full-on digital transformation. Not getting the data ecosystem under control is sort of one of the first mistakes you can make before starting a digital transformation or any kind of transformative engagement. But this is really important. There's a huge but. That explosion of data requires a prioritization around the value of analytics, and what we've heard from some of the leading consultancies where they're differentiating themselves when it comes to data and analytics is being able to demonstrate to their clients in advance what additional decisions are going to be made through the use of data and through the use of analytics, obviously as provided by the consultancy. So it's not just what will the data show or what will the analytics prove out for you, or what are the, and again, you can imagine how in many cases it's easier to show a client how if we take this new data that you hadn't gathered before, we'll show you all these really cool things. It's great to do that, but you actually have to know what decisions are going to be made based on that data. And so the consultancies that are really differentiating themselves are able to show and demonstrate to their clients, here's the decisions that you'll be able to make, not just here's the data you'll be able to view or here's the analytics you can run on that data. It really comes back to the decisions. And that then leads to, by talking about data in that way, there is a lot of talk now, and I'll be totally honest, a lot of it is coming from SAP, and I was at Sapphire a couple weeks ago where they talked about this nonstop, this convergence of operational data and experience data. And you can read our stuff on that when we publish it, and you can read from SAP what they're saying about it. But one really important insight that we've heard from, again, from multiple consultancies about this operational data and experience data sort of coming together is the danger in real-time analysis and in real-time decision-making, mostly because entirely because not everyone is really ready for that. Not everyone is trained on how to make a decision based on real-time analytics, based on real-time data coming across your dashboard of the future, your boardroom of the future. This is and it's a great consulting opportunity to work with clients on how do you make those decisions when you've got both operational data and experience data coming in and it is real time. I mean, we're not there for most clients at all, but when they get there, they're going to need to be able to understand how that impacts what their decision making looks like, and are there people actually trained to make the right decisions with a very different kind of data set and a different kind of analytics coming at them. So with that, we'll take a look at consulting is not possible without people. The people element to this, and I'll take a pause myself for a minute and have a sip of water and let Elitsa take the lead on this. Elitsa?
Thank you, Patrick. So yes, the importance of technology and data is intensifying. They have become an integral part of management consulting. However, people are the #1 lever for management consulting delivery. And technology and data, in my mind, are used to supplement and augment management consulting activities. Consulting is really not possible without people. To get permission to play, management consultancies need people. They need traditional consulting talent, they need industry experts, they need people with digital design skills, and they need people with technology skills, for example. There's no consulting without people being involved in it. People advise on business challenges through technologies. They interpret what machines find in data and apply the insights to changes in clients' business models with the goal to drive business outcomes. So effectively, people take the insights generated from technology and they apply it to the business. And Patrick talked about this extensively. Managing and retaining skilled consulting talent is really one of the greatest challenges we see for all management consulting companies, and not only for management consulting, but broadly in the IT services space, especially when they start scaling digital transformation engagements, and those engagements become more complex. They require in-demand expertise for digital consultants, for example, for people with data science capabilities, for people with industry expertise, business process reengineering activities require specialized skills, or just skills, tied to emerging technologies such as hybrid cloud or artificial intelligence. On the next slide, we cover some of the leading resource management activities for select management consulting companies. And Patrick can begin with Deloitte.
Yep, I think the important part here, you can see that sort of, using video to expand its pool of candidates. I think the important thing to understand about Deloitte, sort of three things. In recent years, we've seen the firm broaden the base of the talent that they're going after and try to appeal to a broader section of graduates. And I don't mean that just from like looking at MBAs or looking at folks with a background in consulting or tax and audit, but really looking at a wider geographical range, a wider range of experiences. The firm has made a clear effort to broaden the base of the talent that it's going after. At the same time, the second point, it's still about attracting younger talent to the firm. It's got a very it's a solid process for how they bring talent on board and how they groom them and how they make decisions about who stays within the firm and how they reward those folks and make them partners. But they do have a strong enough culture to want to bring people in at a relatively young age. So that's still an important part of it. And then I guess a third element to understand with Deloitte is an increased emphasis on explaining how they're expanding their own capabilities. They're not just a tax and audit firm, everyone knows that now, but they're not just strategy and operations, and they're not just HR consulting. All the stuff I talked about before with respect to emerging technologies and how those are playing in the consulting field, this is something that Deloitte has become very good at ensuring that it's part of their recruitment, ensuring that it's part of how they go after talent, and of course, the next part of that is retaining talent. And on that point, I'll skip to Accenture. This is kind of neat, what they're doing with reality headsets and the future talent platform that they have and all. I think it's all kind of cool. I think what's really important is the reskilling that Accenture has put an emphasis on. Kelly's actually going to talk about that on the next slide, so I don't want to steal what she's going to say, but I think it's important when we talk about talent and we talk about recruiting and retaining talent. The retaining part has so much more now to do with the emphasis put on training and on reskilling and ensuring that the people that you spent the time to vet and hire and mold within your culture actually have the skills that they need to stay on board. And then Elitsa, you want to talk for a minute about IBM?
Yes. So IBM is one of the vendors that we cover in the benchmark, and it's in the solutions-led category together with Accenture and Capgemini. If you just take a look at IBM from a services standpoint, the company has been shifting its portfolio over the past several years now from commoditized areas to high growth, high value offerings such as around hybrid cloud, around blockchain, artificial intelligence, for example. But along with the portfolio changes, IBM has been adjusting its services headcount mix. So effectively, it's moving away from commoditized IT services and cutting people on that side and expanding consulting, technology, design skills to drive growth in segments that it sees with growth potential, such as hybrid cloud, artificial intelligence, or management consulting. And that's been going on for the past 2 years, it's a strategy to drive growth in segments that we cover in the benchmark, such as strategy consulting and technology consulting, which effectively were the two areas where IBM saw headcount expansions during the past 18 months. And the goal is to really establish the digital strategy practice as a leading area for IBM's transformational activities with client C-suites. If we move to the next slide, we have more vendors that we cover. We look at the reskilling. No, one slide forward. Yes, so the reskilling. So training is really another area on the resource management side that we see vendors really emphasizing and investing dollars because they need the necessary skills, and if they cannot hire or acquire people externally, they need to make sure that they can use their resources and reskill or upskill their employees to address dynamic market demand, especially around driving business outcomes through next generation technologies. The first vendor on this slide is Capgemini. This is one of the vendors that pushes training initiatives across the company, including in management consulting, specifically targeting reskilling and upskilling, providing certifications on around specific technologies and their sometimes partner technologies. And digital and cloud segments are really the core emphasis for this company. In 2018, the company added 2.2 million training hours, which is a 34% year-to-year increase compared to 2017. And, this trend will likely continue during 2019 as, it has to make sure that it has enough skilled resources and is competitive to address demand. And we have EY and Accenture on this slide, and Kelly can take EY.
Thanks, Elitsa. So starting with EY, the company has recently reinforced their dedication to developing a talent bench that's versed in these digital technologies and to help align their portfolio with the changing demand. Their training programs will provide their current employees with knowledge around analytics, cybersecurity, blockchain, automation, which helps transition their advisory services portfolio. The expanded skill sets are helping EY and their employees better work with their clients to move beyond the traditional services and advisory services engagement to pursue those larger scale transformation projects. In late 2017, they launched their EY Badges program, which helps equip those employees with the emerging technologies and provide the skill sets that they need to shift into the newer demand areas. The Badges program goes beyond just traditional learning and classes. It has the learning and the class piece, but it also requires experience around using these technologies as well as ongoing mentorship. In August of last year, EY also announced its dedication to invest an additional $1 billion into developing their talent, their ecosystem of partners, which Patrick had talked about a little bit before, about how vendors are increasing these tighter partnerships to build out these capabilities. And so EY is creating a greater emphasis on that, as well as pursuing additional acquisitions and resources to support the infusion of these technologies within their traditional offerings, as well as move into those newer ones. Moving in this direction will help the firm enhance those core business capabilities to transform traditional environments and upsell these emerging technologies. As we're going to talk about on the next slide, but I just wanted to brush on it quickly, as culture is a key piece of the reskilling. Integrating the advanced learning within their existing culture makes a big difference. It helps to address their talent development challenges. For example, they provide ongoing feedback as well as platforms that show and track progress with learning and performance ongoing, which helps to retain that talent and reinforce that culture of learning. Moving on to Accenture, reskilling has also it's also been a key initiative for Accenture. They've been using more AI-based tools, similar to like the augmented reality, but they use their platform, which is Job Buddy software, as well as the Accenture Future Talent Platform. The platforms help Accenture to identify and provide training modules to address the skill gaps that they currently have. Similar to EY, Accenture says that it spends over $1 billion a year with these reskilling, particularly with the Job Buddy software, which has impacted 300,000 of their employees over the past 4 years. These platforms help they're more specific, so it's a more fitting tool. It's not as broad-based training, so it helps to really impact their specific roles and not just general technologies. The Future Talent Platform is more focused on the IT staff. It's particularly for AI, IoT, and security capabilities. It helps Accenture to support the shift into more agile business environments that use these AI tools. With the Accenture Future Talent Platform, they've reskilled 200,000 employees. More recently, they've partnered with MIT to launch a Reinventing Quality Engineering in the new program, which helps them transition their engineers and better use AI and automation tools. And with that, I'll hand it back to Patrick.
Thanks. And actually, if we could, this is a little off the schedule, but if we go back to this slide right here about people, because I want to, this kind of came up in one of the questions, and it leads into my discussion on culture, and I probably should have shifted this around a bit beforehand, but something that's really important to understand here, and Elitsa touched on the recruiting and the managing of these different kinds of, this very diverse set of people. We were recently on the phone with a client talking about how they're setting up and running their collaboration centers, immersion center, digital transformation center, whatever you want to call it. And one of the things we were looking at was sort of all the different people that are involved. And so if you look at this slide and you think about those folks working in an experience center, like PwC calls it, not only is it those 4 people, but it's also the lead client partner. It's in a firm like Accenture, it would be a salesperson involved. There would be so many more people that are involved. There'd be an industry expert. There'd be, well, I guess they're on the list. There'd be all kinds of people there. What that is in terms of running a digital transformation or experience center like that, what that requires is not only the talent and not only the ability to manage that, but then you have to lead, and you have to be able to have people in leadership roles that are trained, well-versed, really capable at managing and leading wildly diverse talent sets, and being able to get them to work with typically wildly diverse clients as well across every different industry. And for some of the consultancies, again, like a PwC that works with small and medium enterprises as well as the largest firms, you're going to see that the people that are leading these centers are really, it's a really important and critical role that is sometimes, as we've seen from some other IT services vendors, a bit overlooked. It's considered a job. It isn't considered a real leadership opportunity, and it's not. The other aspect of this is that the folks that you see there on this slide, if you imagine that over time they're impacting each other and they're having a knock-on effect in terms of building up skills, in terms of building up their ability to do the kinds of consulting that we're seeing emerge when we talk about those different kinds of consulting models. So I think it's important to understand that what happens at these centers and what's happening in consulting more broadly is a real emphasis on the ability to lead wildly diverse teams in terms of their experience, in terms of their technical skills, in terms of what they're bringing to the table. And the firms that are doing well are the firms that have identified that need for an emphasis on and a training related to leadership. So with that, we can go to the last formal slide in this, where we do talk about some of the culture shifts that are happening within the IT services space broadly, and then it's having an impact on management consulting as well. And it's not a surprise to talk, or it's not new to talk about legacy IT services talent running into a clash with new talent that's coming on board. I think the important part to understand here is sort of the overarching theme is that, and I'd say this in all seriousness, that when it comes to digital transformation and when it comes to the new in consulting, that people really are the problem. People are what throw the sand in the gears. It's what actually disrupts the transformation. It's people not buying on to change. It's people not being willing to change is people not understanding what's happening with the change. And you can go back and we can talk about the technologies themselves. We could talk about the explosion of data. It all feeds into this. But then the flip side to that is that when it comes to management consulting, people really are the key asset. There is no consulting without people. That said, the second bullet there, there is an emphasis towards solutions-based consulting or asset-based consulting, asset in that case meaning the software and the technology. And that is growing in importance, and we're seeing pretty much every firm that we cover begin to really drive new revenues based on asset-based consulting or solution-based consulting. But I think the important story overall when it comes to talent and when it comes to culture is understanding that there has been a significant shift in the ways that management consultancies are, again, why we talked about it, the way they're hiring, the way they're recruiting, the way they're reskilling, the way they're handling their talent. And that has a lot to do with the clash at the top of this slide between sort of the legacy ideas around IT services and around consulting, and then what's happening new with all these new, with these emerging technologies and with the explosion of data. And then the last point on there I think is important as well, understanding that so not only the recruiting and the retaining and the reskilling, but also then the career paths for a data scientist is very different than it is for your traditional management consultant. And those are sort of the extremes. But when you think about what these consultancies have to do to figure out how they're going to create new career paths and how they're going to manage people, and then again, the reason I went back to that earlier slide because of this point, the way that they're going to lead within an organization that now has a much more diverse talent set. And again, people are the problem with digital transformation, but people are the key asset with management consulting. So if you have to manage and lead that key asset, you have to have really good people to do it. So with that, we can take a few questions. We want to throw this up so you can see the full breadth of this management consulting benchmark. And again, we publish it twice a year, and the next one will be coming out very soon. One of the questions that came in, and I want to tackle this one first, and then I'll let Elitsa and Kelly weigh in as well. Is it of the mentioned vendors, is there a dark horse or company that has significantly increased their revenues in the last 2 or 3 years? From my view, I haven't seen anyone make a particularly significant leap. They've all been growing at different rates. I can't think of anyone that in the last 2 years has really spiked. But when I think of a dark horse, I think of a competitor that's doing something different now that is sort of worth watching because it's going to mean something in the near future. We added Bearing Point to our management consulting benchmark about a year ago, maybe a year and a half ago now, and that's in part because of what we were seeing Bearing Point do in Europe, and we thought it was significant enough that our clients for this benchmark would understand what's going on. We've also seen PwC and EY close the gap on Deloitte, which has, for as long as we've been tracking the management consultancies, has been the largest. But both those firms have been growing very fast. And again, closing that gap. And I think there's a lot of, as we dive into each one of those profiles around EY and PwC, there are a lot of reasons why they've been as successful as they've been in the last couple of years, and decisions and choices that they've made with respect to acquisitions and with respect to where they're placing their bets that are different from Deloitte, that I think is at the same time that they're closing the gap, they're probably widening it in terms of the way that Deloitte operates and the way that PwC and EY operate. And then if I had to make a bet on who's going to have the biggest impact in the near term, it's going to be IBM. IBM, I think, is going to start growing faster. It's because of the investments they've already made into consulting. It's because of the convergence between technology and strategy that we've been talking about today, but also for a couple of years now. And then I think it's also because IBM has moved away from selling its own hardware as part of its engagements. It's no longer tied to itself, and its ability to partner with so many others, I think, is actually going to be a way that it can pull through management consulting. I mentioned this at the beginning. There is an element of the managed services and of the technology pulling through that higher-end strategy consulting, sort of the opposite of what we traditionally think of. I think IBM has probably is probably in one of the best positions to benefit from that. So, Elitsa, your thoughts on a dark horse here?
Thank you, Patrick. I do agree with you. We haven't seen that many revenue shifts in terms of growth for any of the vendors. There haven't been large acquisitions in the space to drive inorganic revenue growth like we do see in the IT services space where we see some of the larger companies merge again between each other, so that drives higher revenue growth. And yes, it's inorganic, but it's building capabilities and expanding client reach. So for management consulting, it's been on a steady growth trend, but there have been many instances of small-scale acquisitions made by vendors, and I want to call out here Accenture, IBM, and Capgemini that have been in the space around design consulting. So those vendors are really aggressive, especially Accenture, which made a number of acquisitions in the past year in the design consulting space around acquiring creative agency capabilities. Capgemini is another example to building digital consulting resources. IBM using its interactive experience capabilities in design strategy. So, those segments are really expanding for those three vendors, and it's something that's not very typical for an IT services vendor. Out of the 30 vendors in the IT services space, I don't see other, those three would be my top three in terms of expansion in those segments, and it's really a natural thing to do because if you want to drive business results for clients, you need to address customer experience. You need to address marketing strategies. You need to address user experience, and they cannot be done with, just pure IT consulting or, just you need to have more experience in terms of marketing capabilities, design, and digital services. So that's what I want to call out for the management consulting space.
And that ties beautifully with what I heard a couple weeks ago again at Sapphire with respect to where that company is going, and all the management consultancies, with the exception of KPMG, of course, all work very closely with SAP. They're, an important technology partner for all of them. So, and on that note, I do want to point out we just have our pictures up here. You're welcome to connect with us and follow up with any additional questions you might have after this. And again, our research here that we're looking at today was just the management consulting benchmark. I know we talked about IT services a lot. The IT services benchmark, that product comes out once a quarter. We do quarterly reports on all of the vendors that report their quarterly earnings. And then we have a monthly report that comes out around digital transformation insights, and that covers everything from cross-vendor analysis, looking at two of the top vendors. We look at IoT in the emerging tech space. We're looking at quantum this month. We're looking at analytics. We're looking at digital marketing services. So we're covering the entire digital transformation space. And as you can imagine, a lot of the insights that we're gathering there are both based on and then influence the way that we think about what's happening in the management consulting space. So with that, I think we're going to go ahead and wrap up. If you have any other questions, just shoot them to us by email, give us a call, find us on LinkedIn or whatever. And then I will say that while we've been sitting here, the KPMG management consulting profile came into my inbox to review, so that will be publishing within the next couple of days. So look for that one as well. So anything else, Sarah, before we close?
Yes. All right, everyone. So please feel free to reach out to the team with any follow-up questions. If you have a few moments, we would greatly appreciate if you could fill out the survey on your screen. A replay version of the webcast will be available after the event and will be sent out to you via email. To view a list of our upcoming and past webinars, please visit tbri.com. Be sure to join us Wednesday, June 12th for the makings of the telecom edge compute market. Thank you and have a great day.